Hello, everybody. Obviously, stocks are in free fall, and this week was extremely painful to the bears. We've been under an across the board sell signal basically the entire time. There was a half ass false quasi neutral signal on the 29th in the NASDAQ 100, and I believe maybe the S&P 500 too. However, I didn't post it on StockTwits, which means, quite officially, that it's not official, basically meaning that I'm still operating under a sell signal, and it's been like that ever since sometime here in December, and it's not changing as this past week shown. The market is in free fall mode, and the way that we're set up here, you can either expect a bounce on Monday, worst case scenario, a major crash. I'd say right below the August and October lows on the S&P 500 if that happens, if we do continue selling off on Monday. I'm not sure. I just know that as we waterfall here, volume is picking up. And the last time we did it, it looked like we were going to bust wide open, but a disgusting attempted rally that really suckered me in at the end of November, my bad, really has turned way into a very ugly rollover sell-off. But we've been expecting this since we started re-breakdown at the end of December, so none of this is surprising to anybody at Big Wave Trading. We're about 90% cash. We still have about a 5% long positions out there, and we still have 5% in leveraged short positions overall. So we're basically just all cash because unfortunately all these signals really came without like any real true short sell signals to me. I guess it just didn't happen in the inverse ETFs that I like to play overall for the market. As you can see, the one pocket pivot point signal back here is way back here. You get chopped up. The only one that produced a signal was SDOW, and it gapped up. And normally, if I would have just done my limit orders, I wouldn't even be long, but I kept it a market order, so that's why we're long SDOW into this move. But overall, Dow Jones Industrial Average, ugly, no bottom. Yeah, you can start to think that it might bottom at the August October lows, but I don't know if it happens. Any rally attempt, I'll be looking to short. I have no interest in buying this market with the chart patterns that are out there, and we'll go over some of the indexes here in a little bit. But with the Dow Jones Industrial Average, the Nasdaq, now look at the volume on the Nasdaq sell-off. Nasdaq 100, just absolutely ugly. Look at Netflix. We're short Netflix. Look at Facebook. Look at Google. These are some major sell-offs below key moving averages. Facebook, major heavy distribution below key moving averages. Apple hitting new low. Microsoft, that sell-off. So just some ugly, ugly moves. And worse off, Russell 2000 hitting new 52-week lows again. Hit them yesterday. No bounce immediately, so it's no 2B reversal as per VIX Barandeo. So instead, we continue to sell off. Not good. Russell 2000 extremely weak. Dow Jones Industrial Transportation Average, same thing. Not as bad today, only down 0.70%, but once again, another heavier volume sell-off to new 52-week lows. That's not very encouraging. And whenever we look at the oscillators, none of them are indicating any kind of, oh yeah, this is definitely going to bounce, and we definitely have an oversold area here. As you can see, all of these oscillators have a lot further to go before they even attempt to touch their August oversold levels. So to even get bulled up here following this sell-off is damn foolish and is probably more beneficial thinking to those that are still long stocks in a heavy amount. And I tell you this, but after reading Twitter and StockTwits at the end of December and seeing all these quote bullish chart consolidation patterns that people were posting up, especially on stocks like Google, Facebook, and Netflix, and then to see how they're acting now, I'm 100% sure that there's a ton of longs trapped that are praying for a bounce here, which is why it could get ugly on Monday. I mean, the Russell 2000 Dow Jones Transportation Average, you want to lead, and they're lagging. And on that end, look at the biotech index. Biotechnology is where the growth is going to always be. We're getting older. Everybody's going to want to live longer. All the old people have their money that, they're not spending, the ones that can't afford it, and they're going to spend it all on healthcare. So it's important to watch XBI, and I think it's XLV for the healthcare, ETF. And as you can see, once again, rolling over on heavy volume. And that goes, I mean, look at all this. Look at the tech stocks, XLK, heavy volume rollover. It looks like it could get ugly. It could get very, very ugly. Look at XLF, the financials. That's terrible. Look at Goldman Sachs and look at Citigroup. Just Citigroup, absolutely putrid. Terrible, terrible charts. Look at XLB, materials stock. Look at XHB, the home builders. Look at XRT, the retails, and you can see new lows. So everything looks ugly. Everything you want to see lead is not leading. And if you think that, oh, we're oversold and we definitely have to bounce, I just want to remind, I don't know which one I'm pulling up here because everything's got a stupid, okay, that's not important to me. But let's look at the advanced decline line. Let's turn this into a line chart. There's always, want to edit line chart. Now look at the advanced decline line. You can see the advanced decline line's hitting new lows. There's no positive divergence there. If this market was really like starting to like, okay, it's probably oversold and we're going to bounce, we would see some kind of positive divergence in the advanced decline line. I'm 100% sure. But based on the way it looks, I mean, it's not pretty at all. It's confirming the Russell 2000 and confirming the Dow Jones Transportation Average. You want the Dow Jones Transportation Average, the Biotech Index, the Russell 2000. You want the advanced decline line to be leading or showing some kind of positive divergence. We don't have any of that, so it's crazy whenever I see people calling for bottoms. And then if and then whenever you're like, well, we're so oversold, look at all the stocks that are trading below the 200-day moving average. Yeah, it's at 16% overall, but let's just go back to 2008. 2008, it got all the way down here to less than 2%. We had less than 2% of all stocks above their 200-day moving average. So 16% isn't too crazy. We're near August lows, yeah, but even in 2011, we got all the way down to near the 10 level. So, it's not extremely oversold yet to where we have to bounce. And then T2108, the percent of, oh my God, what do I keep pressing wrong? T2108, the stock's hitting above their 40-day moving average since it doesn't have 50-day moving average here for some weird reason. We go back to 2008 again, you can see we're not even near, first off, we're not even close to the August lows here. This is a 2-day chart, by the way. We're not even nowhere near the August lows, but we're nowhere near the 2011 lows. And you can see in 2008, this number got all the way down to 1%. So in 2008, it got really oversold and really ugly. Notice how those were the lows. So until I see that, it's going to be hard to think that it's too crazy. And then the other thing I keep seeing is that new highs and new low ratios are, out of whack. And yeah. As you can see, the new highs and new low ratio is extremely low with many, many more new lows and new highs. We're near the August levels. But once again, let's go further out and look at where we got in 2008 and 2009. We were able to hit levels of 0, 0, 0, 0, 0, and 0 4 separate times, and we did it once in 2007. So 4 separate times we had 0% of stocks hitting new highs and 100% of the stocks were hitting new lows. So right now, it's not that bad. It's extreme, but it's not extreme enough to call that a definite bounce has to happen here. So once again, it could happen, but nothing is ugly enough to suggest that it will happen. Now, obviously, on our end, we have no new signals except for one short signal, no new long signals, I should say. I do have one short signal that I want to take, but it's not that great, but it was in a few stocks. So first off, I have to move it to this one, but you see these two blue bar spikes right here? These are pocket pivot point short signals. So today's move, even though it's hard to see on this chart, that blue line jumping up, that's a pocket pivot point short signal right there. So now getting back to where the pocket pivot point buy signals are, let's just go ahead and get rid of that for right now. You can see that it's failing its 50 and 200-day moving average on very heavy volume with a big surge in BOP. It appears that it's coiled in this kind of like, triangle pattern that is forming here, and it looks to be coming towards its apex. And if it's already starting to break down below the 50-day and 200-day moving average, I assume it's going to go below these support levels and then eventually through the apex. And I would assume it should pull back enough to at least touch the October lows, preferably pull all the way back to the August lows, giving us a nice gain on that stock. Now, speaking of short sale positions, there was a short that I wanted to take 2 days ago, but I did not because it still had a potential that I thought that it could rally and or I was not really happy that I didn't get it where I wanted to get it, which was around the 330s if you look at the chart on the reversal. And of course now LPTH is starting to sell off finally. So watch that one because IB had shares and I should have been short and I didn't take it, and now I think I'm going to pay for it. So continue to watch to see how that short sell signal works. And don't forget stocks like LEI, FXCM, stocks that I couldn't short now look like shit. And then how about my mistrade on EARS yesterday? Intraday I tried to get it short at 775 following its breakdown. It didn't quite bounce up to there, got around like 760 something, and then I tried to short it again whenever it brought back up to 740. Started to work in my favor, but then I had to cut loss at 747, and now look at what it did today. Because I live on Maui and I can't always get up to day trade these things, EARS plunges. That would have been a nice 19% gain in one day. But the bottom line is, market looks sick. Don't try to call a bottom yet. We're looking to, trade the index leveraged ETFs on the long side on a bounce intraday, but we want to see more panic selling. I don't quite see panic selling yet. I'll see you guys in the chat room on Monday. Aloha.